For TraderInsight.com, I'm Adrian Manz, and it's time for your daily dose of the doctor. Let's take a look at some price activity in one of the opening gaps from the Thursday session. And this was in Twitter. And here I've scrolled the chart back to the left so that I can show you what we were doing in the room today. So I know that as we were talking about it, a couple of you had questions about, well, where'd you get the idea to draw that line, and why'd you draw that one? And sometimes it's hard sort of on the fly to answer those questions, but I'm going to give it my best shot right here. So the first thing we had happen was we had an opening gap to the downside, 2 standard deviations, looked like it was going to be a great retracement entry, and then we had this big move in the first bar. Never got a real bump above that high of the first bar of trading, so we were waiting, said we were going to wait and see if we couldn't get a swing back at least a nickel or so above this. And by the time we were in the fourth bar of the day, I was saying, let's take a look at this one as a potential downside candidate moving down out of this range. So I know that's not a trapdoor, and it doesn't really make sense as far as the time of the day went, but here's what I was looking at. This pullback that we saw happening, right, was really giving us an indication price might break out of this symmetrical triangle and move back lower again, because we had all this volume decrease as we were moving, and sure enough, the next bar we had that pop lower. Now, as you know, I didn't call that as an entry signal. What I said was, let's see if we get a trend, and if we do, maybe we can get some good pullbacks in that trend. So this is the trend line tool that I used. You want to make sure that this is set to best fit top panel, right? Top panel is the price panel, the bottom one is the volume. So if you would say bottom here, then even if you were drawing a line up here, the line would be based on what was happening in the volume portion of the chart. And then for the column, right, you've got your choice, open, high, low, close. In this case, we want high, and we're just going to draw a line from the point on the chart that made the highest high and then down to where we are currently. And then I changed this to low, and I did the same thing, right? So now we've got a channel that's starting to form. And over the course of the session then, those channel lines went and extended naturally. They do it without your intervention, and they just kept on moving lower. And as that volatility expanded, you can tell it's not a great thing to go and do these after the fact. As that volatility expanded on the way down here, we had the opportunity to get some entries and exits for scalps as price would move up to the trend line and then move back down again. So I'm going to show you the live recording of this chart so that you can see how it went and tracked. But these are the tools that were used to draw those lines. And then when price reversed, of course, right, and we started looking at, okay, what's it going to do when it goes to the upside? The first thing that I told you today was ignore everything that's happening while price is moving sideways like this. Don't start looking for another entry opportunity again until you see another trend forming. And that's why there weren't all that many opportunities here, right? Because you need to wait for this thing to be in place before you can start looking for entries and exits. But these lines, as you can see, do a nice job of capturing what's going on. And when they narrow or when price moves out of them in a sideways direction, it's time to just stand back and let things play out and see where the next trend is going to fall into place. So here you see it. This was the real-time recording from the room. I'm not going to play this out through to the end of the day or anything, because that's going to make it 1 hour and 20-minute recording. But you can see here that when price gets up and touches that top band, what we're doing is looking for a reversal opportunity, and that happened the whole way down. So everything from the breakdown through the triangle, every time price went up, touched that upper band, and then reversed, your first target was the lower band. Now, you'll also recall that at some point I had said, all right, we're going to target right in here, right in this zone, rather than waiting for price to come all the way down to the target. And that was based on volume building every time price gets down there. So every time that the price would make a move down from this band toward the lower band and get to this level, it was backing off. So the reason there were multiple entry opportunities from this level right here was that we kept just taking little scalps, little 15-cent scalps down to this level that it's trading at right now. So you would see it go up, touch the channel, come back down, go up, touch the channel, come back down. That just happened over and over right at this particular time of the day, which was about 10:30 in the morning. So again, in the room, you recall I told you just go ahead and draw another line through that level. So here is where that happened. This was a little bit later, so this is about 10:35, 10:40, somewhere in there. And that line represented the move down to this layer where we saw a bunch of volume happening every time price got down there, and gives us then a good indication that that's a place to look for price to stop if it's moving lower. Now in this case, it's moved up above the trend line, and we're going to see if it comes back in and starts tracking lower. But if it doesn't, then we're going to look for a trend reversal probably after some consolidation, right? So there's usually a consolidation range, especially this time of day, where things are going to start tracking sideways. And at that point in time, you just want to step away and wait and see if you've got an accumulation range in the making and they're picking up stock, and then it's going to start moving higher when supply and demand move out of equilibrium. Now, if you were in the room today, then you already know that when price did start moving in the other direction, we didn't manage to find any other trades. But this, again, is all about selecting the tools and using the tools that you have and using them correctly. And what happened was we saw it started to pop up and out of this range in Twitter here. And then we go through and we're just looking for where is the resumption of the trend coming from. So, is it from back there? No. There is the highest low. So lowest low to the highest low, and then switch it to highs, right? Which I didn't do there. So it's tracking on the lows again. You have to go back, switch that trend tool so that it's selecting the highs of the price bars of study 1 or plot 1. And there you go. Now it's going to track to the upside for you and get that next set of channel lines in place. And of course, what we're looking for here again is for those two lines to stay relatively equidistant as they're moving higher, and then price to come down, bounce off that bottom line, and move back to the upside again. So this particular bar is not one that you would want to get into, even if it was already further along in the leg higher, and that's because it would have to get down below the support line, and that support line would become resistance in order for it to go down and touch that bottom trend line. So I want to see that bottom trend line move over the support and resistance line, right? So that's this line right here. And once it's up there, then any move down that touches or comes close to touching that bottom trend line was where we were going to look for scalps as TWTR Twitter started moving higher. So I asked you in the room if this was something that you guys were interested in talking about, how I was using this tool to find these trades or make these calls, and this was it. So we had good entries on the short side on this one, and then on the way up, we just couldn't find a compelling reason to do it because those two lines started getting narrower and narrower as they moved out, which meant price was moving in a tighter range, and that tighter range makes it harder and harder then to find those scalp entries that make any kind of sense. So that's it. I know, Robert, you especially wanted to see this, so there it is. I hope that clears up a little bit of what we were talking about today. If you have any other questions, shoot me an email, adrian@traderinsight.com. Hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.